Welcome, ladies and gentlemen, to Commodity TV, and it's again time for the Precious Metal Summit Zurich. Unfortunately, it's also only virtual, as through Corona we are really restricted here. But Commodity TV is proud to be again the TV partner of the Precious Metal Summit Zurich, and we have our first interview partner here today. It's Monday the 15th, 10 o'clock in the morning. James May, the CFO of Jervois Global, is today with us to give us an insight into their terrific company. James, good morning to Australia. How are you doing?
Yeah, good morning, and look, great to be with you today to talk about Jervois and our growth journey.
Fantastic. Thank you very much for taking the time. Jervois, that name rings a bell. Of course, I interviewed a lot of times M2 Cobalt, which was taken over by Jervois. So that's long time ago. But since then, Jervois Global, I must say, really improved a lot. Maybe you give us a short overview on the company, and then we go a little bit more into detail, please.
Yeah, absolutely. So Jervois is a company that's been around in Australia for many years, but it went through a significant reset in 2017 and made quite a significant pivot at that time from what was a relatively sort of small scale exploration company to a reset with a new management team and new board, pretty high caliber team. All of us, including our chief executive, have come out of big mining company backgrounds. And really sort of since then, we've been focusing on building up a portfolio of good assets in cobalt and nickel, very focused on building a strong portfolio with good industrial logic, focused on that sector, really to sort of capture the electric vehicle related demand that we think is coming and indeed is already sort of here. So look, as we can come on to talk about, we've got a sort of a very strong core of operating and development assets today, and we're currently capitalised at about 800 million Australian dollars on the ASX, and we're listed on the TSX-V as well.
Fantastic. Super. Yeah, let's go directly into Q3. That's also a slide I have here in front of me from your fantastic presentation. What happened Q3? I saw you bought Freeport Cobalt effective by September, and you did this also with a $235 million equity raise. So please comment on Q3 and what will you do with all that money?
Yeah, look, absolutely. So we've had a really game-changing few months here at Jervois. We've done sort of 3 significant financings and an acquisition. And as you highlight, the most sort of significant event was really sort of through July, August, and then closing the acquisition in the 1st of September. We acquired the residual cobalt processing business from Freeport McMoran, the global mining company. We bought a small but high quality cobalt processing business based in Kokkola, Finland, and really, did that fundraise through the course of July and August, closed the acquisition on 1 September, and really sort of try to hit our stride in terms of integration of that business into our portfolio. It's a pretty unique business in terms of processing cobalt hydroxide into a range of cobalt products, both for the battery sector and industrial consumers. And look, we were pleased to report in the third quarter that our first set of operating results and look although we only have 1 month of formal ownership, pretty sort of strong year to date on a pro forma basis. 9 months of September, $200 million and 15 million EBITDA on the same basis. So we think, with that operating business now at the core of our portfolio, a good tailwind from the cobalt price that's now in sort of the high 20s, $27, $28 per pound. We think it really gives us a really sort of strong platform to continue to participate in this sector. And so that was really the capital raise, was to underpin that acquisition. Gives us a sort of financial strength and a core operating asset that really does complement our 2 development assets in the US and Brazil quite neatly with a sort of good industrial logic.
Fantastic. Yeah, what I also see is the revenue by segment. You have battery metals or batteries 33% and 48% chemicals, catalysts, ceramics, and the rest 90% is powder metallurgy. So that means you are not, let's put it that way, you are only 1/3 dependent on, let's call it battery technology e-vehicles. You are really producing materials which are used in the industry for totally other businesses, right?
Yeah, look, that's right. And look, I think as a management team, we believe in diversification. We've got diversification through our asset portfolio by geography and different parts of the value chain. And within the Jervois Finland business, as you highlight, we've got that diversification by end-use market segment. And, we think that's sort of critical in terms of how we manage risk going forward. And we think, it's a pretty neat mix having, sort of traditional blue chip customers in major end uses of cobalt, which is where cobalt's been used for a very long time. Powder metallurgy and aerospace, for example, or chemicals in industrial sort of sectors. So we've got this sort of neat mix of, good quality customers in those traditional sectors, and then a really strong platform in batteries, which is, as many expect, is going to be sort of the growth, the growth vector for years to come.
Okay, super. Let's come a little bit more to your, let's say, operations. You are working in Finland. I saw also that you have, bought Jervois USA, ICO Jervois Brazil. Can you comment a bit on that? Because I see in your presentation you are already constructing in the US, and you are restarting the feasibility study for Brazil, right?
Yeah, look, that's right. So look, I'll take each in turn and sort of round out the overview of the portfolio. Look, our asset in the United States is the Idaho Cobalt operation, and it's a mining development project. It's the only cobalt resource of significance in the United States, and it really has strong potential to play a key part in providing a domestic source of cobalt for industries in the United States, both in electric vehicles, as electrification theme develops in North America, and also those traditional uses that we talked about a little bit earlier. And so with the Idaho mine, it's what I would sort of call a small but high margin mine. It's got both cobalt and copper. And really the great thing about ICO is that when we acquired it through a transaction with Cobalt, which is the former owner of the asset, we completed that transaction in 2019. It was fully permitted and significant sort of capital already sunk, around 100 million US at that point in time, already in the ground. And really what we were able to do is finalize the studies for the development. And since then, we've managed to sort of fully fund the mine development pathway. And we're in the advanced stage of that final construction stage. Lots of activity on site, both in terms of processing, I should add the construction of the processing facility, and also the beginnings of the development of the underground mine as well. And so what we're looking to do there is complete that in a way that means that we can bring on first production in 2022, which will be a sort of a significant milestone. It's I think in terms of cobalt and sort of critical minerals, it's sort of right up there in the list for the US government sort of priorities. And we think we can, have that as a significant part of an offering for in cobalt, which is so dominated by both sort of the DRC in terms of mine production and China in terms of processing, can provide a really sort of strong offering in the United States and in the Americas sort of region in terms of that alternative.
That would mean that you could deliver like ESG fully conform cobalt to battery makers in the US, right?
Yeah, that's exactly right. So we've got a good solid credentials in ESG, and the way we're sort of configuring our business is to have ESG really running through the core of the way we operate the business. So in Idaho, for example, we'll have access to hydropower. We'll establish the right environmental credentials in terms of some of the partnerships we're already underway with environmental groups, with our local stakeholder engagement. And then with that, and really harnessing the benefits of what we already have in place at Jervois, Finland, we can really roll out across the group a really world-class responsible sourcing program. That means that as we grow with customers, we've got that offering in terms of transparent sourcing and fully traceable supply that we can offer from mine to market.
Fantastic. And Brazil, probably also a good idea to do so, because I see nickel cobalt here.
Yeah, look, that's exactly right. And really, this is sort of the third leg of the core portfolio. And you can sort of see, looking across North America, South America, and Finland, we're looking to have these advanced stage mining and processing assets, really sort of building up that supply chain alternative that we sort of talked about. And really the background in Brazil is that São Miguel Paulista was a nickel and cobalt refinery that operated very, very successfully for many years through the 80s, 90s, and 2000s, and ultimately was put on care and maintenance by its sort of former owner, which was a domestic Brazilian conglomerate. It was put on care and maintenance when that company's own mine in Brazil depleted, and strategically it made sense for them to look to exit. This is a group called Votter and Tim. We were able to position ourselves to by late 2020 to announce an acquisition structure for that refinery, and sort of through the course of late last year and into this year, we've been doing the feasibility studies to really find what that sort of low cost, low capital pathway is to the refinery. The idea is that on the cobalt side, we can take the intermediate product from our mine in the US, put it through the refinery in Brazil, and then send that back to Western markets in a way that we just spoke about, that's sort of traceable and fully fully transparent to end users. And then with the nickel side, we think that as bottlenecks move around in the value chain going forward in this high demand growth environment that we're going to have, that nickel conversion capacity that's there has value as well. And really what we're looking to do there is just finalise the studies now, and we've indicated that we'll announce the outcome of that study in Q1 2022. And subject to the outcome of that studies, we would then look to restart the refinery in the most efficient way possible over the course of the next sort of 2 years thereafter.
Okay. Aren't you a little bit, let's say, in fear, if you want to take it like that the battery technology is going away from cobalt? I just read a big article yesterday, I think about 10 or 12 pages long, that cobalt is more and more replaced. And are you a little bit in fear that, let's say, your market fades away slowly? And could you compensate this maybe to move into a circulation economy, meaning recycling, for example?
Yeah, look, I think there's a couple of comments I'd add. We obviously, there's obviously rhetoric that's out there in terms of substituting away from cobalt. Look, what we sort of see is that substitution journey for traditional uses has been underway for many years, and in the traditional sort of end uses for cobalt, you sort of hit a level where cobalt's become very difficult to substitute. The people using cobalt are really, are in a space where they really have to use cobalt and don't have much alternative. I think with batteries, it's maybe going to follow a sort of a similar trajectory that, as we see it today and we've seen in recent years, there is a degree of substitution. But look, the reality is that I think cobalt has a very firm place in the cathode chemistry mix for batteries going forward. It is a fairly unique ingredient that provides thermal stability to high nickel cathode batteries. And if it was easy to substitute, then, we'd probably be there by now. And look, I think from our perspective, our view is that there will be a degree of substitution that will continue. That's what you see in most credible third-party analyst forecasts. But what you also see is that the demand growth in terms of the underlying volume of batteries and electric vehicles is so strong that even offsetting that effect that there could be some further substitution, you're still talking about a very, very strong demand growth environment in the next in the next sort of 5 to 10 years. So for that reason, we're sort of optimistic. It's it remains to be seen how quickly the science evolves, but certainly we think that cobalt's going to stick around for a very, very long time.
Absolutely. So what is the mine, let's talk about mine life, or let's say operation life. How do you see that in group wide, I would say?
Yeah, so it's an interesting portfolio. Again, we've got that diversification across the value chain. So if you start sort of upstream with our mine in the United States, the way we wanted to approach the development of that mine, we didn't want to be a company that had a very large, long life mine, but a huge capex bill and had to struggle to sort of execute. We wanted to get sort of a fast start. So what we did is we did an update to the studies in a way that supported a 7-year mine life based on updated drilling and a high IRR, and that supported a low capex restart. What we do know is that as we get underground, and certainly the view we have from our experts and from our geologists, is that the optionality to support a longer mine life is there. We've got equity analysts, for example, indicating that as they work through that themselves, that there's a potentially 12 or more years in that ore body. And so, look, we're optimistic that once we do get underground, do that initial development, we'll then do further drilling when it's sort of cost efficient from underground, and we'll sort of, effectively look to prove up that additional reserve and convert what we've got in terms of resources today into reserves, and then, do our, effectively move forward with a plan that really looks to demonstrate the mineralization, and then start to build plans around how to extend that mine life. I think what's then interesting about the other assets that we have is that, because they're principally processing and refining assets, configured in the right way, they can be very, very profitable at the right points in the cycle, but also they're very long life. So, our business in Finland, for example, it's run for many, many decades, and we think it can run for many decades more. And certainly that's how we sort of see it, is that one of the attractions of having that type of asset in the portfolio is that once you have those sort of non-mining assets, they're quite attractive in terms of the cash flow profile and the long datedness and the relatively low capital intensity of their operation, so long as we can continue to operate that as successfully as it's been operated in the past.
Super, perfect. Last question, because you are the CFO, let's talk about some numbers. What is the debt situation of the company? What is cash inside? And what do you expect for 2022? Meaning revenues, profits, just approximately. I know you cannot say that exactly by now, but maybe you can give a little bit of a guidance for our viewers. That would be great.
Yeah, sure. Look, firstly, yes, about sort of the corporate context and our funding situation. At the end of the quarter, we reported that we had about $30 million in the bank. I think the number here is 31.2. We're also in a situation where we've got two, pretty unique debt facilities, both that are currently undrawn. So we've got a project financing facility for our mine development in Idaho. There was a $100 million bond that was issued in July, and we have indicated that we expect to draw down that, or start to draw down that towards the end of this quarter. So that's ahead of us, but as we have it today, we've got $100 million, but all undrawn. The other facility we announced recently is, with the situation in Finland and the structure of that business, we were able to secure a working capital backed financing facility for our business in Finland, and that facility is $75 million, and we've indicated that we're going to draw down a portion of that through the course of this month, and that really helps buffer some of the prices we're expecting to see in Cobalt, and how the working capital needs sort of flow through to the business. So between the equity raise and those two debt initiatives, we've got financial strength and flexibility, and we think we're really well positioned in that context for the future. In terms of 2022, look, there's two things that two really sort of I guess big points to make about 2022. Firstly, with our business in Jervois, Finland, we haven't yet indicated earnings guidance for 2022. For 2021, we've indicated EBITDA will be at least $20 million. The cobalt price has a good tailwind, and I think for your audience, they can, if they understand that the cobalt price this year, for much of this year, has been in the low 20s, and it's moving to the high 20s and possibly beyond for next year. It becomes pretty easy to sort of see a world where we'll continue to grow the earnings potential of that business. I think in addition, what's sort of exciting about ICO is that, as ICO ultimately comes into production in 2022, it gradually gives us that ability to integrate that other operating business. And, whilst there'll be a period of ramp up, really to bring that into, a fully fledged stable operating state. I think what's so attractive about our portfolio is just having these very near-term operating assets. It becomes very clear for our investors to sort of see piece by piece how we're building out this asset of this portfolio of integrated assets, all of which in due course will be having, providing a meaningful cash generation contribution to the group. So I think, to sort of sum it up, we're feeling good about Cobalt and the tailwind. We've had some big milestones this year with the acquisition, and we're really excited about 2022 and beyond.
Super, perfect. It was a great final sentence, James. Thank you very much. A 20-minute interview was not planned, but I found it so interesting to listen to you. Thanks a lot. I wish you all the best. Merry Christmas already, because we are approaching that also. And of course, please keep it going, because this world needs definitely your products, industry-wise, but also battery-wise. And it's always good to see that you are producing Finland, US, and then also in Brazil. This is outstanding. Thank you very much.
Thanks a lot. Cheers.
Ladies and gentlemen, that was James May, the CFO of Jervois Global. Yeah, you heard it, a real emerging global cobalt producer, but also processing company for nickel, for cobalt, of course, but also for copper, and working in Brazil, the US, and also Finland. The company really starts growing and going here. They are already profitable. They make money. This is really important. 31 million in the bank. They have undrawn loan facilities or credit facilities, which they are using now really to bring up their operations here in addition into production. And I really would suggest have a look at Jervois Global. Thanks for watching us, and bye-bye from Switzerland. That was the Precious Metal Summit out of Zurich. Thanks and bye-bye.